Good morning, ladies and gentlemen, and welcome to the Max Estates Limited Q3 FY2026 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. Also, this conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantee of future performance and involve risk and uncertainties that are difficult to predict. I now hand the conference over to Mr. Sahil Vachani, MD and Vice Chairman of Max Estates Limited. Thank you, and over to you, sir.
Thank you, and good morning to all for joining us on this Q3 and 9 months FY26 earnings conference call for Max Estates. Joining me today, we have Nitin Kansal, who's our Chief Financial Officer, Archit Goyal, who heads IR and Corporate Finance for us, and also SGA, our Investor Relations Advisors. Our presentation has been issued to the stock exchanges and uploaded on our company's website. During the quarter gone by, Max Estates launched the first phase of Estate 361 in Sector 36A, Gurgaon, with a gross development value of about 2,500 crores. This community, Estate 361, is envisioned as a forest-led community spread across 18 acres, offering a distinctive forest in the backyard experience. This development is also intergenerational and features senior living residences managed by Antara Senior Living, along with an integrated wellness center also managed by Antara, thereby delivering a holistic well-being ecosystem focused on proactive, preventive, and personalized care. The encouraging market response reaffirms the sustained demand for high-quality, differentiated, and wellness-centric residential developments. We are very pleased to report pre-sales of over 1,900 crores in Gurgaon. The strong response underscores the robustness of our Live Well philosophy and the strength of our product offering. More so, average price realization in this development currently stands at 22,000 rupees a square foot, reflecting a significant premium to the prevailing micro market, as well as to our previous launch project, Estate 360, which was launched last year. Driven by this encouraging response to Estate 361, Max Estates is now planning launches aggregating about 4,000 crores GDV in Noida, comprising of Max 1 in Sector 16B and a project in Sector 105, both in Noida, targeted for Q4 FY26. Post Estate 361 Phase 1 launch, Max Estates has a launch pipeline with a GDV potential of about 14,500 crores. In addition, the company aspires to add between 1 to 2 million in the residential segment every year. For the commercial real estate portfolio, we are seeing continued strong leasing momentum highlighted by the signing of an LOI for a long-term lease, pre-leasing 200,000 square feet at Max District, Sector 65 in Gurgaon, securing gross rentals of over 270 crores over the lease period. The transaction has been concluded 2.5 years ahead of the project completion and at a 35% premium to the prevailing micro-market rentals. The company also maintains a robust leasing pipeline for both our under-construction projects, Max Square 2 and this one, Max District. Overall, commercial portfolio is poised for an annuity rental income potential of more than 700 crores annually on a 100% basis across delivered under construction over the next few years. Here as well, we aspire to add 1 million square feet on the commercial office space segment every year. The company has also initiated solar power sourcing for our Max Square project, representing a key milestone in our sustainability and decarbonization roadmap. This marks the first move towards Max Estates' long-term goal of shifting 50% of our portfolio's energy usage to renewable sources by 2030, aligned with India's climate pledge. With these brief highlights, I'll now hand over the call to my colleague Nitin for the business updates for Q3 and 9-month FY26 and the outlook for the business. Over to you, Nitin.
Thanks, Sahil. Good morning, everyone, and thank you for joining us on the call. Let me cover the business updates in the 3 sections: residential, mixed use, and commercial developments. Starting with the residential portfolio, At our flagship project Estate 128 Noida, we have achieved pre-sales numbers of INR 2,007 in excess of 2,700 crores with 100% inventory sold and collections stand close to 1,100 crores. At Estate 360 Gurugram, we have recorded pre-sales of 4,831 crores with a collection of over 1,100 crore rupees. We launched phase 1 of Estate 361 again in Sector 36 Gurugram with a gross development value of approximately 2,500 crore rupees. We are pleased to announce a pre-sales numbers of over 1,900 crores in Gurugram. We have also entered Gurugram's luxury residential market by securing development rights on prime land parcel of 7.25 acres strategically located in Sector 59 Gurugram on the Golf Course Extension Road, with a development potential of 1.3 million square feet and gross development value of more than 3,000 crore rupees. It is expected to be launched in FY27. Coming to the mixed-use portfolio, at Max 1, Sector 16B Noida, the company is developing ultra-luxury residences, grade A office spaces, curated high-street retail and exclusive club amenities. The project seamlessly integrates the live well, work well, and the play well philosophies. Spread across a 10-acre parcel with a development potential of 2.5 million square feet, the project is targeted to launch in the current quarter and carries a GDV potential of over rupees 2,000 crores, along with an estimated annual potential of 120 crores. Additionally, the company has also acquired a 10.33-acre prime land parcel in Sector 105 Noida, strategically located on the Noida-Greater Noida Expressway. The project will comprise of a mix of residential and commercial development. With a total developable area of 2.6 million square feet, phase 1 alone offers a GDV potential of over 3,000 crore rupees. Coming to the commercial portfolio, our operational commercial real estate assets, Max Towers in Noida, Max House Phase 1 and Phase 2 at Okhla, and Max Square again at Noida, continue to operate at 100% occupancy, generating an annual rental income of over 155 crores. Max Square 2 Noida project, having a leasable area of 1 million square feet, is on track and expected to receive occupancy certificate by the Q2 of FY28. Max District, Sector 65 Gurugram, having a leasable area of 1.6 million square feet, is also on track of completion and is expected to receive occupancy certificate in 2 phases, Q2 of FY28 and Q3 of FY29. With this, let me also provide you with a financial update for the 9 months FY26. Our consolidated revenue stood at rupees 150 crores for the 9 months and a consolidated EBITDA stood at rupees 27 crores. Consolidated profit before tax stood at rupees 29 crores and PAT of 20 crores. The total leased area in the portfolio stood at 1.23 million square feet. The leased rental income is up 38% year-on-year to 115 crores in 9 months. Max Asset Services, a facility management arm, continues to clock revenue of 40 crores in 9 months. The debt as on December 25 stood at rupees 1,700 crores, including LRDs of 1,000 crores. Cash and cash equivalents as of December 25 stood at 1,284 crores, resulting in the company having a net debt of 414 crores. Now I'd like to open the floor for the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Please use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Mohit Agarwal from IIFL Capital Services. Please go ahead.
Yeah, good morning everyone, and congratulations to the team on the launch of the Gurgaon project. My first question is on the Gurgaon project. So between the last year when we launched this project, there was obviously a very different response. It was a complete sellout. This time around, obviously, it's been a smaller launch, and the response has still been great in terms of 50-60% sellout. Any learning in terms of, let's say, the type of behavioral change in the mindset of the customer in terms of, let's say, the ticket size or affordability, or expectations in terms of payment plans, or anything that you want to share? What has changed between last year when there was so-called a euphoric market, and now it's been a more subdued overall market that we've been talking about? So any learnings that you may want to share?
So great question, Mohit. Thank you. This is Sahil. So firstly, absolutely. We see for us, particularly of the inventory that we've sold, almost 66 to 70% is driven by end users, where we have seen families that have come and visited the experience center about 5 to 6 times at least. So what we are delighted with is that the end user is buying the product. There is a preference for the unit sizes, the customer experience, the hospitality, and the well-being offering that we're doing, and a deep appreciation of that. And you can see that our payment plans have also been very similar to what we did even last year. So the payment plans have not changed like the market has changed. We continue to hold our payment plans and have also been able to have a good premium, not only to the micro market, but also to our previous launch of Estate 360. So we are seeing end user demand, B, an appreciation for the end client experience a lot more than we had done earlier.
Okay, great. My second question, Sahil, is a little longish question, but for let's say for your guidance to be met, you will have to do the 2 launches, the Max, the Noida development and the 105. Both launches have to happen, and you need to have a meaningful success in both of them. So that is the first part. So how confident you are on that? If you could, we obviously know that Noida is doing better. So some color on that. And then the second part of that question is then for next year, for FY27, you have the golf course extension which you've recently acquired, and the remaining part of 361, right? Is that the basically launch pipeline for FY27, or do you plan to meaningfully add something, and that would be also a meaningful part of FY27 launch? So color on basically fourth quarter and FY27, that will be helpful.
Yeah, so I think at this stage, what we can say is that we remain very confident with our products that we are bringing to the market in Q4. As you can imagine, I'm not able to share more detail on that at this stage, but I'm sure that at the end of the quarter, we will obviously share a detailed update on that. So we remain very confident on our launches for Q4. The second aspect is in terms of next year's pipeline. Yes, we are going to be having those 2 projects that you mentioned, and also a pipeline for a launch in the Noida market as well, which we will be sharing in due course. So those are our plans, and as we are consistent with our strategy to be able to be across both Noida and Gurgaon, across both residential and senior living, and offer both independent senior living and intergenerational communities as well. So that continues to remain our strategy and plan.
Okay, and the last one is 27. Do you expect a kind of a double-digit growth in pre-sale? Is that you're still building that number?
I think, I wouldn't like to comment on that at this stage, but what I would like to say is that we are continue to remain extremely encouraged by the response that we are getting. Like I shared with you, both from an end user perspective, more so from an end user perspective, and also for our senior living development. So for both, we are receiving tremendous and very encouraging response. So we continue to remain extremely bullish, and hopefully will outperform the market in terms of what our delivery is.
Perfect. Thanks a lot. Those were my questions. All the best.
Thank you, Mohit.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. We have the next question from the line of Pritesh Sheth from Axis Capital. Please go ahead.
Yeah, good morning and thanks for the opportunity. First, on the pre-leasing that we did, if you can throw some details on rents per square feet that we have signed up, how they are versus our expectations that we had set or what we are underwritten for. And second question is, again, on your upcoming launches in Noida, how are you seeing initial signs? Is that market, how that market is doing compared to, Gurgaon? And what kind of ticket size, are you targeting, and, what still works for that market as per your initial market feedback that you're getting?
Yeah, thank you, Pratish. This is Nitin. Just to answer your first question, the leasing which we have done in Gurugram in Max District, what we have been able to better what we had estimated in our projections of 723 crores rentals and on a full-blown basis. And the entity which has taken over this space is a listed entity, and this looks this as a long-term vision for their office space in Gurugram.
What's the term for which it is signed? It's 5 years, 10 years?
This is again for a 9 years period with the similar standard template of 3+3 with an escalation.
Okay, got it. And this 270 crore that you have put it also includes the contractual escalation?
Yes, that also includes that.
Which is 15% 3 years or 5% every year?
It's 15% every 3 years.
Got it.
And Pratish, if you can continue with the second question you had on these lines.
Sir, you have left the queue.
Okay, sure. Thank you.
Thank you. We have the next question from the line of Ronald Sioni from ICICI Securities. Please go ahead.
Yeah, thank you, sir, for the opportunity. Just on the leasing front, are we seeing, any interest from GCCs also? And this entity, whether if you can, highlight which sector, especially these entities, and what kind of pre-leasing pipeline you are seeing in this project, once this deal is also done. So are you seeing other good inquiries for this project?
So hi Ronald, this is good morning. So this comes from the GCC sector itself, this transaction, and we are getting a very good traction and have a very healthy pipeline for both our projects in Noida at Max Square 2 and Gurugram. We expect significant leasing to take place by the time the building comes under operations.
Okay, great, sir. And on the Noida, like we also see this time the new business development includes more of deals with respect to Noida. So, should we be expecting, premium luxury projects, getting good traction in Noida, or say, mid-premium or lower segments only are gaining traction? So if you can bifurcate what kind of deals you are getting in Noida?
Yeah, I think as this is Sahil, we are mostly in the premium segment. We continue to operate in that, and we are very focused in that segment. Like I said, we are both in the premium segment and also in the senior living segment. And they straddle the range of the entire premium category upwards of 6-7 crores, up till about 12-13 crores, 14 crores. So that's the range that we operate in, and we believe that Max Estates has developed a good brand, a credibility, and a very good end user traction in that in those segments, and we continue to build upon that. We will continue to focus there, not just in the Noida market, but also in the Gurgaon market.
Okay. And the stress which we had earlier felt in the Noida residential market, should that be behind for the sector as a whole?
I don't know which stress we are referring to, but in the last 3 or 4 years, I don't think that there's been any stress per se in the market. In fact, there's been a buoyancy in the market, and particularly for us, even in Gurgaon, we don't see any stress. In 35 days, we've been able to sell 60% of what we've launched. So frankly, I don't think that's stress, in any imagination. And we, like I said, not only, but the encouraging thing for us is it's driven by a very large proportion of end user demand, which we are very, very encouraged by.
Great, sir. And lastly, on the OPM operating margins this quarter, so you might have been booking sales and marketing costs related to this project launch. So if you can bifurcate that, or if you can adjust for that, what kind of operating margins were there for during this quarter? Whether upwards of 20% or lower than that?
Yeah, I think rightly pointed by Ronald, because of the accounting standards, we are not allowed, the advertising and marketing expenses go in the P&L at the when we incur it, and the revenue comes later. If we adjust for that, we would be looking at an operating margins in excess of 25%.
Oh, 25%. For this particular quarter, Q3 FY26?
Yes.
Okay,
Yes.
great, sir. Great, sir. Thank you very much, Sahil, sir, and best of luck.
Thank
going
you,
ahead.
thank you, thank you, thank you.
Thank you. We have the next follow-up question from the line of Pritesh Sheth from Axis Capital. Please go ahead.
Yeah, thanks. So my second question got answered on the Noida market, but on the cash flow side, if you can briefly highlight what were the spends during the quarter in terms of construction spend, capex, and land investment, because I just want to reconcile the increase in net debt that we see this quarter.
So, Pratish, what is happening, what we have incurred in the current quarter is a number in around 350 crores on the project. In addition, in the current quarter, we also paid out for the new acquisition which we did on the golf course extension road, which had an outlay of close to 450 crores. So this is how the number has got incurred. So if you say the debt number has not gone up, since the cash got deployed on the new acquisition, the net debt number has come up, and there's a swing from net cash to net debt. But not incremental debt has not been taken during the period. The only regular construction finance debts have been taken.
Sure, got it. That's helpful. That's it from my side. All the best. Thank you.
Thank you, Ji.
Thank you. We have the next question from the line of Samarth Agarwal from Ambit Capital. Please go ahead.
Hi, team. Thank you for the opportunity. Just wanted to get some sense on collections. What would be the payment scheme for the customers of the first phase of Estate 361, and what kind of collections are you expecting in FY27 from all the projects?
Thanks, Samarth. So what is happening, we maintain a equi-distributed collection plan in line with our construction timelines. All the projects have an equal distribution over the life cycle of the project. In FY27, what we expect a collection to happen from two prongs. We are expecting collection to happen from the existing sales and also from the new launches which are expected to take place. From the existing sales, what we're expecting to make a collection in the range of 1,500 to 1,750 crores, and an incremental number of 1,000 to 1,300 crores to come from the new sales, which we plan to do in the next FY.
Okay, so total would be around 2,500 crores of collection.
No, it will more range close to in the range of 2,800 to 3,000 crores.
Okay. And just one update, any update on the Delhi land pooling policy? Any chance when we can see Max starting to add projects in the Delhi market?
So far, there is no incremental progress basis what we had last reported, but we continue to work for the approvals and are very hopeful that in the coming year or so we should be able to move the needle on the approval process.
Understood. And just one last thing, I think I might have heard it wrong. The fourth quarter total launch for the residential side would be at around 4,000 or 5,000 crores?
Between 4,000 to 5,000 crores.
Okay. That's all from my side. Thank you.
Thank you.
Thank you. We have the next question from the line of Amit Agicha from HG Hawa and Company. Please go ahead.
Yeah, good morning and thank you for the opportunity. My question is connected to the geographic strategy. Like NCR is currently the sole focus. Under what conditions would the company consider entering another geography? Or is the intent to remain a regionally dominant specialist player?
Thank you, Ji. That's a great question. At this stage of our journey, we remain committed to the National Capital Region. And if you look at it, while on the outside it may look like a concentrated strategy, we believe that it's a very well thought through risk-adjusted strategy, because not only are we in Gurgaon and in Noida, which are two very large micro markets of the NCR market. But within that, we are in the residential and in the senior living space. And then obviously there's commercial as well across both of these micro markets. So for the foreseeable future, we continue to remain very focused in the NCR market and really emerge as the top two players in the NCR space.
And so second question was like how confident is the management about like office leasing demand visibility beyond FY27-28, especially like considering hybrid work trends?
We are very confident. I think office demand is going through a very bullish cycle at this time. There's also limited supply or grade A supply that's coming up. So we continue to remain very optimistic, and particularly with the brand, the track record, and the experiences that Max Estates has already set up for its commercial offerings. We remain very confident of demand moving forward, and that is not just our saying, but that is now validated by the pre-lease that we have signed, which is again at a premium to the micro market, and it's much before our completion of the project. So for Max Estates in particular, we remain very optimistic, but more so we remain also overall optimistic on the demand scenario for office leasing in the National Capital Region.
And the follow-up to that is like, do you foresee cap rate compression or expansion over the next cycle for grade A NCR assets?
It's very difficult to comment on this because I think this is also a outcome and a factor of interest rates at some point. But I do think that we will see that grade A assets will come more and more at a premium, and the availability of those assets will be very limited. So in general, we are seeing a very strong demand for grade A or grade A plus assets, particularly those that Max Estates is developing. But difficult for me to comment on how we see interest rates or cap rates moving forward in the coming few years. Tough to say at this stage.
And so the last question from my side. So over the next 5 years, do you envision the company evolving more into a residential-led developer or an annuity-heavy real estate platform? Like what will be the steady-state mix ratio between the two?
So, we are looking at both, and as Nitin mentioned in his comments, we are looking at almost a 700 plus crores of annuity income, right, annually. So I don't see that that is insignificant or small by any stretch, and we're looking to grow that as well. So that's not a fixed number. It's what we have with our pipeline today, and as we have said that we will look to grow that pipeline. And on the residential side, we've already done 5,300 crores last year, and we look to grow that in the coming years as well. So, we are looking at both with equal passion and commitment to grow both of these portfolios. As you're aware that we have New York Life as a platform partner, 49% across all our commercial assets. So we remain very committed to building out both these strategies in the National Capital Region.
I appreciate you answering all my questions elaborately, sir. Thank you and all the best for the future.
Thank you so much. Appreciate it. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. We have the next question from the line of Parikshit Gupta from Fair Value Capital. Please go ahead.
Good morning, Sahil and the team, and thank you very much for the opportunity. I'd like to ask a question on the growth pipeline. It's a very exciting pipeline, but we see meaningful change from the projects that were in Q2 versus in Q3, notably removal of some projects in Gurgaon and addition of more mixed-use projects in Noida. Furthermore, most of the new projects in the pipeline are now outright purchases as opposed to JDAs earlier. So can you please help us understand the strategic rationale behind these decisions, both from the perspective of what you are seeing in these micro markets as well as the company's capital allocation strategy?
Yeah, thank you. Just to answer that question, what is happening is this list and the pipeline is a dynamic process which we keep on evaluating at all points of time. And we have got a long list of assets which we evaluate. The assets which come more on priority and look very near to fructifying come in the table which goes out for the investor presentation. That is the reason you may see some churn in terms of how the list is being shown in the deck. Now coming specifically on few assets which you mentioned on the mixed land use in Noida, these are few few auctions which have been announced by the local authority Noida, which are expected to happen in the current financial year itself, which are proposed to be done outright. Now, the only difference is authority itself gives you a payment plan option to be paid over 4 years. So rather than having a landowner partnering with you, the authority gives you that leverage to pay over a period of time. That is the reason we have mentioned as an outright purchase over here. But this, in terms of capital allocation, the capital allocation would be more akin to a joint development agreement transactions which we were evaluating in Gurgaon.
Understood. Just a follow-up on this, please. So in terms of, I know this question has been asked in different forms earlier. In terms of the growth prospects of each of these markets, Gurgaon and Noida, considering the crowding and competitive intensity, have we, selectively moved more toward Noida, which remains, a key footprint for our business? Or is it just a balanced strategy in this quarter, just the pipeline seems to be more focused toward Noida?
I'll take that. This is Sahil. Actually, if you look at it, we are equally in both Noida and Gurgaon. If anything, our square footage may be slightly higher in Gurgaon. So there is no such plan to kind of move more to one micro market or less to one micro market. We believe that the social ecosystem is in both micro markets in Noida and Gurgaon, and they're separate markets, and therefore we will continue to operate in both and look to scale in both. I think a lot of our strategy is also driven by the location per se, right, and the capital risk framework that we follow internally. We have certain micro markets that we are extremely optimistic and bullish on, and therefore we do go very aggressively in those micro markets to acquire assets. And where the balance sheet sizes are, where our risk portfolio and balance sheet, conservatism comes in, we look to do opportunities like joint development, like we've done in the 30-acre parcel that we have in Gurgaon. So it's a little bit of an agile and nimble, a framework that works, but it's driven more by location and micro market.
I understand. This is very helpful. Thank you for answering my questions.
Thank you.
Thank you. We have the next question from the line of Vibhor Talreja from Nest Amplifier. Please go ahead.
Thank you. Congratulations on the Gurgaon launch, Sahil, and everyone. Just few clarification questions to start with. On slide 3, you mentioned that in Estate 361 we have sold 1,500 crores of products till date. The till date there means December 31st, or we are talking of till Feb today when we are talking?
In December 31st, please.
Okay, thank you. For Estate 361, the GDV mentioned is 9,000 crores, of which we have launched 2,500 crores, little higher than 25%, and we have sold 1,500 crores, which is approximately 1/6 of the GDV. If I look at the Noida projects, the 2 projects that we intend to launch in Q4, the combined GDV is close to 5,000. And I know different projects, different sizes will get launched, and or whatever we launch, like you earlier said, you intend to sell close to 2/3 to probably full. But when I try and add the numbers, I'm just trying to make sure that how close are we expected to reach on the overall sales guidance of 5,000 to 6,000 crores versus the 1,900 crores of pre-sales that we have done in 9 months. If you can provide some clarity on that math, that would be helpful, please.
Yeah, thank you. This is Nitin to answer. So what is happening in terms of Estate 361, the remaining inventory is also on sale, and we expect a significant amount of sales also to happen from the remaining launched inventory of Estate 361. And the launch which we're expecting to do for the Noida is close to 4,000 to 5,000 crores, and we are hopeful and bullish that we would be able to achieve sales to meet our guidance which we provided to the market.
Okay, thank you. I think essentially what you're saying is that in case of Noida projects, you intend to launch most of the GDV from the go, rather than launching part of the projects. Would that be a correct inference?
Yes, you can infer that also.
Thank you. All the very best.
Thank you.
Thank you. A reminder to all the participants, You may press star and one to ask a question. We have the next question from the line of Ritvik Sheth from One Up Finance. Please go ahead.
Hi, good morning, everybody. So couple of questions. So firstly, I don't know if I missed, sorry, I've joined a bit late. On the business development front, what is the plan for FY27 in business development front? I know we have guided for 2-3 million square feet. So, what kind of projects we are looking to acquire in terms of GDV as well? And any plans to acquire anything in Q4 FY26?
Hi, Ritvik. Good morning. This is Nitin. So what we are planning, you rightly mentioned, we are planning to acquire in the range of 1 to 2 million square feet of residential every year and close to 1 to 1.5 million square feet of commercial every year to augment our portfolio. In terms of GDV, what we expect is to deploy a capital of close to 1,000 crores across the residential and commercial. And this assets which we propose to acquire would be a combination of an outright and a joint development agreement, whereby optimizing the capital deployment on the projects.
And would it be like, so if you're doing, say, 6,000 crores of pre-sales this year and assuming, say, some growth on that in FY27, would it be fair to assume that we would at least target to replenish that kind of inventory?
We aspire to replenish the inventory if you see the pipeline which we have got, we already have got sales pipeline for FY27 and also certain portion of FY28. We would like to replenish and build on the inventory of not only FY28 and FY29 also on the current year business development initiatives.
Right. Okay.
Just so that we are clear, if you see the presentation, it shows that we have full pipeline for FY26, full of 27, and we already have some part of 28. So we are very comfortable in terms of our growth pipeline. Thank you.
Right. Sure. And what is the debt on the books for the commercial and for the residential debt?
So, Ritik, as we speak, we will have a lease rental discounting, which is completely on the commercial asset, which is close to 1,000 crores, and the construction finance debt of close to 600 crores, which is on the commercial side. On the residential assets, we are not carrying any debt.
Okay. So it is gross debt. There is no gross debt on the residential piece.
Yes.
Okay, got it. And is there any cash on the residential books or no?
So on the residential side, we're sitting at a cash balance of close to 1,200 crores, which is all logged in the RERA accounts.
Okay. So that will get freed up over the next few years as
yes.
we execute.
Yes. As we continue to do construction, the cash will keep on releasing from the 70% accounts.
Got it. And one final question, Nitin, for you. What is the collection that we have received, and what is the construction cost that we have done so far in 9 months FY26?
So in the 9 months FY26, what we would have collected would be a number of close to 1,100 crores as we speak, and we would have incurred a cost of close to 450 crores on the undergoing projects.
Okay. And how is it expected to close like in FY26?
So we are on track for our collection plans. I think once we give our annual numbers, since the launches would be happening as we speak, in the 4,000 to 5,000 launches will happen in February, March. We expect that we will be on track of our collection targets for the year.
Okay, got it. And what would be the other cost other than this, the corporate overheads and other fixed cost for the full year?
So we incur a corporate overhead cost in the range of 50 to 75 crores through the year.
Okay, got it. Sure. Okay, this is helpful. Thank you and all the best, sir.
Thank you.
Thank you. We have the next question from the line of Arpit Kumar from Unify AMC. Please go ahead.
Hello. Good morning and thanks for the opportunity. So just wanted to understand, execution of a project is important. So just wanted to understand how is the accountability structured internally and the systems what are in place so that we can avoid execution slippages and cost overruns.
So I'll take that. This is Sahil. So just to share with you, I don't know if you picked up, but I think 6 months ago, we made some organizational changes and we hired Mr. Vachan Singh, who joined us as Chief Operating Officer Projects. He spent about 35 years in the industry across organizations like DLF, Tata, L&T Realty, Oberoi Realty, and many others. We have a team of almost 300 people that are under him across civil, structure, MEP, and other capabilities that we are driving construction. We are very delighted to share that so far everything that we've delivered has been on cost and within the committed timelines that we have. So we continue to drive this process, and this is a separate organization that is purely and wholly focused on what we call the execution or the projects side. Obviously, being in the National Capital Region and being across in one geography, broadly Noida, Gurgaon, helps us a lot in terms of execution, delivery, scale, and scale now has helped us a lot. We are doing, multiple projects, and with the scale that we have, that also has come to our benefit. So I think with the organizational change that we made, the capabilities that we built, geographical focus and execution focus, we are very confident that we will be able to deliver on our commitments here.
Thanks. That answered my question.
Thank you. We have the next question from the line of Anuj Upadhyay from Investec. Please go ahead.
Yeah, hi. Thanks for the opportunity. Again, it's a follow-up on our FY26 guidance. So this 1,900 crores of pre-sales is till Jan, if I'm correct, right? 1,500, which you mentioned, was for 361 till December. But the one which you have mentioned in slide 4 is till Jan. So of the 2,500 which we have launched, almost 19 crores have been sold. Right, sir?
So Anuj, just to clarify, against 2,500 crores, we have done sales of 1,500 crores, and 400 crores was the existing inventory of Estate 360. In total, the number comes to 1,900 crores. So we have achieved 60% sales in the.
Got it. Thanks for the clarification. And so for the rest of the year, again on the two side, you mentioned that 5,000 crores is something which would come from the Noida one. And can we expect the balance launch of 360 S1? Because we have targeted somewhere in the range of 9,500 crores kind of launches. And probably, even if Noida comes in, the total launch number would be around 7,500. So would the other phase of 360?
Thank you. Yeah, sorry. I think I got the question. Just from that perspective, we will be more focused on what are the sales that we are doing versus the launches. So our launch strategy will get determined closer to the time and be a little bit more nimble and agile around it, depending on how we are able to achieve our numbers. But we are very confident across this, and there's obviously a lot more to be launched in the Gurgaon projects as well.
Yeah, thanks, Sahil. And lastly, as much of our project has been launched during the Q3 and Q4 time. Any guidance would you like to give for FY27 on the pre-sales part?
At this stage, we would not like to give guidance for FY27. I think we are focused in the next, month and a half of, achieving what we had said. And then obviously once we have the next call again, hopefully we'll be able to share some more color at that time.
Thanks. That's helpful, and that's it from my side.
Thank you.
Thank you. We have the next question from the line of Varun Bahl from Pluto's Investment. Please go ahead.
Yeah, hi. Thank you for the opportunity. I was just wondering, the series of launches which you have carried out from, say, FY24 and you go on to FY27, what are the kind of margins that you're looking?
So
very ballpark figure.
Yeah. So if you see, what we have launched is we have got a combination of outright and a joint development agreement. So what we have been guiding is, in the case of Estate 28, we would be having margins in the range of 40 to 45%, which is an outright asset. And in the case of Estate 360 and 361, which are in the nature of joint development agreement, we will have a margins of 22-25%. But interestingly, both the projects will have IRRs of the same nature, because the capital deployed on the JDAs is significantly less as compared to an outright purchase.
Yeah, completely appreciate that. The numbers look almost scarcely believable. Depending on how the handovers play out, we could be looking at figures of 1,500 crores plus of profitability in FY29-30, depending on how the handovers play out.
Yes. This is how, depending on how the handovers play out, we can expect the numbers will get reflected accordingly in the loss accounts.
Yeah, looking forward to that. Thank you.
Thank you. We have the next question from the line of Vikas Atri, an individual investor. Please go ahead.
Good morning, Sahil and Nitin. Thanks for the opportunity. My first question is there a phase 2 in Sector 105 Noida, and what is the revenue potential of that?
Thank you, Vikas. Yes, there is, and we are still working out our plans for the final design, and we'll be able to share revenue potential in the next quarter. We may not be able to share that as of now because it may not be crystallized.
Fine. Okay. Thank you. And my next question is regarding the sponsor land bank. Is it possible for you to give a brief idea what is the revenue potential from that?
Thanks, Vikas. Yes. So that is obviously a 100-acre land parcel, mostly contiguous. As per the current guidelines of the land pooling policy that are in place, we are talking about potential revenue of upwards of 10,000 crores of GDV.
Okay. And will that be a mixed-use project, or will it be purely residential?
It's primarily residential with some mixed-use components as part of it.
Okay. And so my last question is, we've been listed for almost, I think, 10 plus years, or almost 10 years. And by when do you think can we become a dividend-paying company?
We're very hopeful that with the completion of our residential projects in the next 2.5 years, we should get to that point because, as you know, the accounting in the real estate company, the profit will only be recorded on the books once we are able to get the OC. So we're very hopeful and confident that once that cycle starts for us with Estate 128, we should be in a good position to be able to do all of that.
Okay. Thank you so much. I appreciate all the effort you're putting in. Thank you so much.
Thank you. Appreciate it. Thank you.
Thank you. We have the next follow-up question from the line of Arpit Kumar from Unify AMC. Please go ahead.
Hello. Just a follow-up. Just wanted to understand on the approval side of Max Estate and 105, have we received the RERA or is it pending?
We've received building plans. We are just awaiting the final RERA approval.
Okay. And when it is expected, if you could?
Very shortly.
Thank you very much. As there are no further questions from the participants, that concludes the question and answer session. I now hand the conference back to the management for closing comments. Thank you and over to you, sir.
Thank you, everyone, and look forward to speaking again in the next quarter. And stay safe and stay well. Thank you.
Thank you.
Thank you. On behalf of Max Estates Limited, that concludes this conference. Thank you for joining with us today, and you may now disconnect your lines. Thank you.